Hello and welcome, traders. I am Rachel Deschelle, Senior Manager of Trading Services and your host for Long Options. Now, this is a class where we make the assumption that you are familiar with the basic concepts of options already. We build off of those and take a more directional look when it comes to looking at option strategies. Now, for today, I'm joined in the chat by Brett Crowther. Please chat in your questions, comments, requests throughout the session today. I'll make sure to keep an eye on the chat. And please follow us both on X. I'm Rachel-CS. He is Brett Crowther, CS. Please like this video and please subscribe to our channel, Trader Talk Schwab Coaching on YouTube. Now today, we have quite a few trend trades today, so I'm going to try to get through as many as we can. We're looking for support bounces off the 20-day moving average. So a lot of bullish setups we're looking at today. But before we get started, let's dive into some of these important disclosures here. So options carry a high level of risk and are not suitable for all investors. The information that we're going to cover is for general informational and educational purposes only and should not be considered any type of recommendation or advice. And we are going to cover the paper money software application today. Keep in mind there are some differences between paper and live. Now, as far as our agenda, we are going to start this class the same way we always start this class. We're going to do our little market overview. We are going to review, manage some of our old trades. Then we're going to dive into some new setups while discussing the concept of long options with a lot of those concepts of price, time, and volatility, and place new trades on the platform as well. So let's get started and dive into Thinkorswim, and let's start with that overall market overview. Well, we are seeing a heightened bit of volatility today with the VIX inching its way closer to 20, just really showing that there is some elevated fears in the market. We can see that the S&P 500 has again reclaimed that 20-day moving average, and it looks like it's real close to finding that 50-day moving average there in white as support. We can kind of measure that move here from how far we are away. We're less than a half a percentage point away, so wouldn't be surprised if we found a little bit of support there, but something to keep an eye on there with the S&P. Now let's look at the Russell, because this was something that I know some of us have noticed. Yesterday we had that bounce of support right around that $2,600 level, where the Russell really tried to reclaim its 20-day moving average with that bullish engulfing candlestick. We saw a little bit of follow through today with that push, and now we're back below that 20-day simple moving average. So the level, that line in the sand that traders may be watching here with small caps, is really around 2,600, where this gray zone really is right now. That's going to be that first level of horizontal support. Now, if we can't seem to hold that, you have the 50-day a little bit below, right around 2,560. That would be another area to watch there. Now, let's go into reviewing some of our old trades, because we did close out of some of our trades. We did get stopped out of some of our trades. So let's go back and review, one of them being our trade that we had on Agnico Eagle Mines. We actually, if you guys remember last week, we moved our stop to basically getting triggered right here at this level of support. Obviously, with that nasty day in the metals, we got stopped out of our position there. We took off half of the position as well when we took a lot of our profits, but then the rest of it got stopped out right there during that day. Now, ACN, that was another one that we got stopped out of. We saw this cup and handle pattern. We took a long call, and then we had our stop right around 272 or so on that one. And then a couple other trades that we are still currently in. I'll kind of show you guys the monitor tabs so we can take a look at those. We're still in Freeport-McMoRan. We're still in Merck. So those are some of a couple of the trades that we are still in. Oh, one more that I exited yesterday, funny enough, was FedEx. So we had a long call on FedEx. I took about an $8,000 profit on that one, I think it was. So we had a pretty decent profit. Today would have had more, but again, you can't ever be upset over taking a profit. So sold into strength there on that one, but we are out of that trade on FedEx. Now the other two, let's talk about these ones a little bit more. So Freeport-McMoRan, we are definitely up on that one. We have a profit percentage of 28%. And if we come over here and look at the chart on Freeport-McMoRan, we can just see that it just had a recent retest of its 20-day moving average and seemed to have bounced and gapped up from there. Now, what I did in the meantime was I moved up our stop a little bit. So I'm going to show you where our stop currently is for Freeport-McMoRan. I moved our stop up to 18 as the stop price and 16 as the limit price that comes after, because again, remember that the stop is activated off the asking price of the option and our limit kind of comes a little bit below it to kind of catch it in a fast moving market, especially since the bid ask spread is a teeny bit wide on that one. So that's where I adjusted that one to. But what I'm going to do on this one is I'm actually going to change this to just 3 contracts, and I'm going to sell the other 2 contracts. I'm going to take profit on the other 2 contracts since we're at nearly a 30% gain. So even though we have a ton of time, I'm still going to let these ones ride, but taking my profits where I can. So let's hit confirm and send on this one, and we'll send that. And then with the other 2 contracts, let's place a closing order and take some profit on the other 2 contracts here. So I'm going to bump these up to 2 and try to go for the midpoint here. And we'll make that good till canceled and hit confirm and send. Okay. And there we go. So we got that one. Now, Merck was the other one. Let's take a look at the chart on Merck. We had a long call on that one as well. And we took a long call. I believe that was, let's take a look at when we placed that trade. When did we place that trade? So we placed that trade a couple weeks ago on the 13th of January. So let's take it back to when we placed that trade. We saw this retest of support. So that's where we took that trade. We had a little bit of, I know we had our stop a little bit under that level of support. And since then we've had quite a bit of a bounce. And if we zoom out one more, we can see that it reached our profit target actually on the weekly. So when we were looking at this one, looking at where it could make new highs, we wanted to zoom out a little bit to see where it could possibly run into resistance. And we saw that this level around like 119, 120 was kind of going to be our target. So this is an area that even though we have been moving the stop up in this case, this also may be an area where we do want to take a little bit of profit because that is a multi-year resistance level and it reached our target price in this case. So if we kind of go back here to Merck in this case, I am going to right click on this order that we have, and this is where I have moved up our stop in this case. And I moved it up to 19 on the stop, 17 on the limit. Again, there's no guarantee on if it's going to activate at or near that limit price. But again, we're trying to have control of the price here. We're going to move this down to 3. And we're going to do the same thing that we did on the last one. Even though we have a ton of time, we're still going to take a little bit of the profit off the table. So we're still going to sell 2 of our contracts there and take some of our gains in that case. So I'm going to hit confirm and send here, send, and then I'm going to close out the other 2 contracts. Okay. And we're going to try for the midpoint here. We're going to hit confirm and send. and send again. Okay. So we have those trades in. Let me look at some of your guys' comments, questions in the chat. Let's see. Okay, what happened with the Dell trade? Our Dell trade, we placed that in our price patterns class. So that one was from our price patterns class. But if you want to look at the chart real quick on that one, we were tracking that. I know it's kind of a messy chart. We were tracking this head and shoulders pattern really playing out in Dell. We waited for confirmation for a certain percentage below that neckline. I know some traders may be watching that one as well, but we'll update you on that trade in our price patterns class. Let's see if there's any other questions lingering. Okay. It looks like we are good on that front. So what I wanted to start today with you guys was just a scan that we can use for stocks that are looking for a 20-day moving average bounce. So I want to share this with you guys, and I could show you guys how I have crafted this scan, but let me just put this in the chat real quick and let you know that these are not guaranteed for accuracy, timing, or results. But essentially what we're looking to do is, because we're in a bull market, I made this scan for looking for bullish trend trades. So we're starting this look at all listed stocks that are greater than $20 and have a 50-day moving average of volume greater than 2 million shares traded. And the reason why I bumped that up a little bit more is because typically the more liquid the stock is, typically you'll have more liquid options as well. So it kind of filters out some of those stocks that may not have, they may have a nice technical setup, but they may not necessarily have liquid options. So I wanted to place that one in there as well. And then I put a few different pieces of criteria for the overall trend, looking at the short-term trend and the long-term trend, and then really searching for that retest. So I'm going to put in the conditions that we looked at here. We're looking at a stock that is greater than its 200-day moving average. We're looking at stocks that are also greater than their 50-day, also greater than their 20-day. But we're looking for stocks that have retested that 20-day moving average anytime within the last 3 days. So we're just saying that the low or that edge of the candle has tested that 20-day moving average within the last 3 bars or last 3 days. So that's what we're using in this case. And just a reminder here, we're using some of these study filters. So if you're opening up this scan in paper money, you won't necessarily get the results that you would see in live. So just kind of keep that in mind because study filters are only available on the live side. So, so keep that in mind when you are looking for some of these results. So what we're going to do is we're going to take some of these from this list and look at the charts, look at the technical setups, and we're going to craft some of these trades. Now with this, we already know that we want to buy call options in this case because we are scanning for bullish trends on the short term and the long term. Maybe it leads to a resistance breakout here or there, but essentially we are looking to take part in the upward movement of the stock and use that bullish thesis and essentially go long a call or buy a call in this case. So there's obviously a couple different things that we're going to keep in mind. So I'm going to do a little bit of work here on the chart, hide the 50-day moving average, and show the implied volatility, because in this class, we talk about that quite a bit here. So if we just look at the first chart of Dow that we are looking at here, we can see that over the last few days, Dow definitely had a retest of that 20-day moving average, and really it was pretty range bound here, kind of at the lows of the market, and then it had that retest of old resistance, now new support, and then made its way towards another level of resistance here. So this is going to be the level that we're watching here that's been touched quite a few times. So that's the next level of resistance. But what we've seen is that price has been making higher highs and higher lows and has held that 20-day simple moving average. Now, what is implied volatility doing? Well, implied volatility is looking like it's still relatively low to where it's been in the past year. So that's kind of one of the things that we want to look at in addition to the trend. We have already seen that Dow is in the midst of an uptrend. It recently touched its 20-day moving average. It may be running into a little bit of resistance, which may cause a little bit of consolidation here. Of course, we don't have a crystal ball, but in a sense, this is giving us confirmation that we did see that bounce. We are seeing a still trending move to the upside in Dow. So the next thing we obviously look for as an options trader is to see what the volatility environment looks like. And for us right now, it's relatively low. Another thing that we may look at is to see if they had an earnings announcement anytime recently or if they have any coming up. So I'm just going to put that on our chart as well. And it looks like they just recently had earnings just last week as well. So we don't have to run into any earnings or possibly elevated levels of implied volatility. So this is going to be the first one that we are going to look to place a trade on. So I'm going to go to the trade tab here, take a look at the option chain, and let's talk through our time to expiration. So we've obviously been looking at the short-term trend, the 20-day moving average, which is telling us about that 1-month trend. So that's really the type of trend that we are following here, is that 1-month trend. So we may want to look a little bit further than a month out, possibly about 2 months out, because we know that as we get closer to expiration, typically when we're about a month out, about 30 days out, that's when that time decay typically tends to kick into higher gear. And as an options buyer, we want to make sure we mitigate any bit of time decay that's working against us. So we may want to look a little bit further out. So I'm going to look at the 17th of April here. And we also talk about wanting a little bit of intrinsic value too. So a lot of times in this class, we look at options that are trading slightly in the money with a delta around 60 or so. That's typically the guideline that we have used. So what I'm going to look at right here is this one right here with the 2750 strike call. We can see it's trading 380 by 420. So that is roughly that may put us a little bit over on our 10% spread. I guess that's pretty close. If we go for 4, that puts us right at 10%. But keep in mind, let's actually just go at 25. We're going to go at 25. I know it's a little bit deeper in the money. This is typically a larger delta than we typically go for in this class, but it does have a tighter spread where we're not necessarily like right on that 10% rule, since that's one of the rules that we like to keep in this class. So let's kind of work with that one and go with the 25 strike in this case. So I'm going to pull up an order on the 25 strike by right clicking and going to buy custom. And let's just go with stop limit in this case. Since this is a trend trade, we are going to follow the trend. We're going to move up our stop as we go. We're not necessarily going to place a profit target since we are looking for more of a trend trade. So that's the reason why we're just putting a stop on the downside. Now, we do have $10,000 that we can put into one trade. So what we're going to look at here, we could possibly do, let's just say we want to do 10 contracts. Okay. So it's still staying well within our $10,000. We're going to try to go for the midpoint for 580. So if I hit confirm and send, just showing you here, obviously the most we are able to lose is roughly $5,800. So $5,800 is our premium. That's how much we are paying. That's how much we are able to lose in this sense. So that is our max loss. Now, our goal is to stop out our losses before then, because we know in this class that we don't want to take more than a $1,000 to $2,000 loss, since that's within the 0.5% to 1% of our account, just kind of starting from where we started at $200,000. So what we're going to be looking to do is place an order for our stop that's still going to allow us to stay within those parameters. So I'm going to place a stop here right around, let's see, let's go 450 in this case. And we're going to place this at 420. Okay. So we can do quick math and see where our entry is versus where we mentioned we're going to possibly get stopped out at, or when our activation price is going to get triggered. So if we take 580 minus 450, and then we multiply that by the number of shares we're controlling, that's still only risking in this particular trade, that's risking about $1,300. Now we have our limit price that's going to come in below it, because just a reminder, the stop triggers off the asking price when you're selling. So it's always going to trigger off of that asking price of the option. We want our limit price to come in a little bit below it. Again, there's no guarantee where we're going to get out at, but we just know that we do have a limit price coming at underneath. So we're going to place this order good till canceled here. And we are going to look to send this into our long options account. So we're going to hit send on that first one. Okay, perfect. That one is in. So I had a couple questions here on just the tighter spread and looking at open interest and volume here. So let's just kind of look at this. So as far as just looking at the open interest, it may be low relative to some of these contracts, but it is because this option is a little bit deeper in the money. So keep in mind, you're going to get a larger move on that particular option just because the delta is larger too. So essentially it's that last option before this option price moves dollar for dollar with the stock. So this delta is really telling us per dollar move in the stock, our option is theoretically going to move 84 cents in that case. So a lot of options traders, you'll typically see higher volume, higher open interest at the money or slightly out of the money options versus what would be considered like deeper in the money in that case. But in this case, the first measure of liquidity that we look for as options traders is the bid-ask spread. So that's going to tell us how liquid that option is or how tight that market is. So that's going to be the first thing we look for, and we know the rule for that is 10%. So we're not looking for a bid-ask spread greater than 10%. And then obviously we go down to things like volume and open interest. So hopefully that helps here. And let me see if you have any other questions. Is there a reason we do not do leap puts for credits or even a call? You may want to, I guess that one, I'm not really understanding your question on that one. Typically with leaps, we look for, a lot of traders with leaps may look for long calls, because typically with leaps, you're looking to participate in the long-term bias of the stock. So a lot of times folks will use that to just simulate kind of like stock ownership. Obviously, we've talked about differences between stock ownership and holding a long call in that case, but it would be a little bit more aggressive to look for a leap put. I know traders do definitely do that, but a lot of the times when traders are looking for leaps, they may be looking for call options just with the inherent bullish bias in the market or in a stock, and they may look at some of those favorable fundamentals as well. So hopefully that answers your question there. So let's go to the next one that we have that showed up in our scan with a looking like a favorable possible bounce here from that 20-day moving average. So we see that Halliburton has been in quite an uptrend. It has definitely danced around its 20-day moving average. We can see just here recently, it yesterday had a doji candle right on its 20-day moving average, and today we are having a little push up from that. So I would say that is a follow through. It looks like, obviously, market's not going to close in until a couple hours, but it looks like we are going to have a close above its 20-day moving average. So this is going to give us a chance to possibly buy the dip in a confirmed bounce from its 20-day moving average. Now, some traders may look for a close above the high of this low day. So they may look for a close above 33.30, which is right where we're trading at right now, just a penny above it. Or they may look for two closes above this level or a certain percentage above this level. But for the purpose of this class, this is going to give us enough confirmation to take this trade. We actually are going to go with a leap trade on this one, believe it or not, because I know you guys have been asking for leaps. So looking at a few of the fundamentals on this one, which has been one of the some of the framework that we looked at for leap options. It has a higher return on equity, growing earnings, some of those things that we've looked for on our example scans for this one. But again, do your research on leap options. A lot of folks with leap options, they do weigh the fundamentals and the technicals. So with this one, let's move to the trade tab. With Halliburton, we can see here that the current implied volatility percentile is 19%. So this is telling us that the current level of implied volatility is in the lower fifth of where it's been over the past year, which gives a favorable environment for buying options. We talked about that 20-day moving average, so we know this is a trend trade. We're going to look more than a couple months out on this one, obviously, because we're looking at those leaps. So I'm going to look at something that's greater than a year. So I'm actually going to look at the 21st of January 2028 on this one, okay? Now, the first thing that we're looking at on this one, obviously we see a ton of open interest. We don't see a ton of volume because you're going to, with leap options, not have as much volume, not have as much activity in the leap options as you do on the kind of like front months, the weeklies, and some of the closer monthly options as well. But for this one, let's take a look at the 30 strike where we're looking slightly in the money here. We still have roughly a 10% spread on this one, still giving us that measure of liquidity there with a delta of 68. So it's going to be that measure of telling us, again, what dollar move we're going to see theoretically on the option, which we would see if a $1 move in the stock. So with this one, let's do the same thing that we did on the last one, buy custom with stop limit here on this one. And let's bump this up to, we're going to do 7 contracts on this one. And you can see here, actually, we're going to do a couple more. We'll do 10 contracts on this one. And you can see here, the most we're risking still stays within our $10,000 limit. The most we are risking, since the most we can lose on this is what we're paying for it, it's roughly $93.50. What we're going to do here on our, as far as our stop price and our limit, we're going to place our stop a little bit below here at, actually, we're going to make this a little bit lower so we can give ourselves a little bit more room on the stop. I know with some of these leap options, they may get stopped out too quickly, especially since you have a little bit of a higher delta in this case. So we don't want to get stopped out too quickly in this case. So let's just place this at, let's look at 790. And let's go with 720 on the downside. Okay. So if we take $9.35 minus 790 is $1.45. We take that times 800 shares. That still puts us at only risking a roughly not even $1,200. So we could give ourselves a little bit more room in this case, maybe around 750 or so. And let's place this at 6.8. Okay. So again, similar to like we've talked about on the other orders, again, that limit's going to come below the stop. It's going to allow us to have a little bit more control over our order. And so we're going to use that one here. So I'm going to hit confirm and send after I make these good till canceled and send that to my long options one here and hit send. Okay. So we immediately have a position in that one. Now, let's see. I have a comment in the chat. I know, Chris, you mentioned IV on HAL is currently higher than 52% of the last 252 trading days. For me, it shows an IV percentile of 19%. But something to keep in mind with leap options too is you're going to be holding this option for a very long time. So I know we've talked about this quite a bit, and you can kind of see it on the chart here too. So it should show that it's relatively low if you just kind of look at where it's been. But essentially with leap options, obviously we're still going to look for a lower implied volatility, but you're expecting to hold this through a ton of volatility fluctuations, through earnings, announcements, things like that. So keep that in mind when talking about the volatility of the underlying when it comes to a leap option. You are still going to have that overall greater sensitivity to changes in implied volatility with the leaps just because you're holding it for so long. So hopefully that helps there. Now, let's go into another one here. So I have another one on Williams-Sonoma here. So this was another one that I looked at. We can see that over the past year, there's been a couple base formations that have formed. And we can see right now we are at this level of resistance, okay? We just made a new all-time high today. We actually just had a little bounce from that 20-day moving average as well with continued follow through. So this one is setting up technically for us to possibly take that bullish bias here. New highs are not bearish in this case. In this case, we're kind of trading that, obviously that bounce of that 20-day, but also that break of resistance as well. And if we zoom out one further on this one just to see over the long term where some levels, additional resistance levels could be with Williams-Sonoma as well, we actually see that there is none. So we can see over the last few years, it looks like Williams-Sonoma has actually been forming this cup and handle pattern, which those of us that are looking at price patterns, that's typically a bullish type of pattern formation. So over the long term, it doesn't look like there is any levels to the upside, especially if we zoom all the way out. So this may be an area where we have to kind of additionally trend trade this one and hold on with our stop on the downside too on this one. So let's go to the trade tab, all products. Let's take a look at levels of implied volatility. We just saw those on the chart, still relatively low, still in the lower half. We don't have any real true upcoming earnings announcements, things like that. So let's look at the 17th of April, since that's a couple months out, kind of still following the framework that we did for the first trade there. And let's take a look at the option chain here. So we can see we have pretty tight spreads with the options. Obviously, not a ton in open interest. We don't have really too much in volume either, but there are still tight spreads here, so you could avoid slippage in this case because there is still a tight market for these options. So what we're going to look at is this 210 strike call, since this still stays within that 10% spread here. And I'm going to right click on this one, buy custom with stop limit. And with this one, I'm going to be looking to do roughly 4 contracts here. So still going to stay within that $10,000. Again, the most we are risking is how much we are paying for this, which it looks like it's roughly $8,800. And on our downside, let's just place our stop at, let's go with 18 in this case. And we'll put this at 16. Okay. So still staying within our risk parameters here of the account. Stop comes first, limit comes second. We're going to make this order good until canceled. And we are going to hit confirm. Actually, we're going to try to go for the midpoint there. Place this a little bit lower. We're going to go for confirm and send here. You can see it lowered my stop, lowered my limit. I know a lot of folks start with the price discovery at the midpoint. We're going to do the same thing. Just a reminder, you're not due a fill at the midpoint, but we could try to save a couple $100. So we're going to try that. And we're going to hit confirm and send. Send this to our long options one there and hit send. Okay. So we did 3 different trades today. Let's look at, I think we have time for one more, you guys. So this is crazy. We're fitting 4 trades in today. I know we are moving fast. I know some of the feedback that you guys have given me is the more trades, the better. So I've tried to find quite a few for us to go through to see how much we could fit in while still talking about the most important things with options, which are kind of like our strike selection, our implied volatility, the time component, things like that. So let's go with one more. So Intel is the next one that I'm looking at here. We still have had a continued uptrend in Intel. Now, it was a little bit range bound for a while, but keep in mind when we saw that, we are still seeing higher highs and higher lows. So when we're looking at trend, the thing that's going to tell us if we're in an uptrend is the stock making higher highs and higher lows. Now, if we start to make a lower high, or if we start to make a lower low here, obviously that's going to tell us about that change in trend here. But again, we had a couple bounces from the 20-day moving average. We had that gap up, then we retested it again with a move higher. So on this one, we're again going to take a long call trade in this sense, since we have seen that confirmed move. Looking down at implied volatility, we can see we still are relatively maybe closer to the middle of where implied volatility has been over the last year. We can double check the implied volatility percentile there. But again, we don't have any upcoming earnings or things like that that we could possibly see elevated levels of implied volatility going into. So let's take a look at that one on the option chain. And we can see again here, kind of right around where I said, implied volatility percentile of 48%. So still in the lower half of where implied volatility has been, still favorable for a long option buyer, because we know that those premiums become more expensive when volatility increases. So we're trying to get it at a little bit of a volatility discount in this case, and that's kind of why we look at those levels there. Now, again, we're going to work this as a short-term trend trade since we are looking for bounces of that 20-day moving average. So we're going to look for a little bit more than a month out just to still not have too much time decay. So the 17th of April with 73 days left till expiration is what we are going to target here. And you can see, obviously, Intel, it is a very liquid stock. So it is a very well-known name. Obviously, a lot of action in the options market here, ton of volume, ton of open interest. I want you guys to pay attention to a couple things here too. If we look here, we can also see that a couple other things that we haven't talked about yet, which is the Vega. So that's going to tell us what dollar value we're going to see on a move of our option per 1% change in implied volatility. So theoretically, if implied volatility goes up 1%, the value of our option should theoretically go up 9 cents if we had this at the money one. And then as far as theta, T for theta, T for time, that's going to tell us about our time decay. So I know some of you that are new to the Greek, so this is kind of what we look at here on the option chain. I typically have this layout pretty much every time I teach this class, and our theta is going to tell us how much theoretical time decay we're going to see with each passing day of the option. And you guys can notice with 73 days left till expiration, since we're giving ourselves more time, we're not going to see a ton of time decay on these options. 4 pennies really isn't too much. If we look closer to expiration here, like the February monthly, you can scroll down and see that time decay is double. So over time, that time decay is going to pick up, but just wanted to illustrate that there. Now for Intel, let's take a look at an option that is just slightly in the money. Let's look at this tight spread on the 48 strike option here with a delta of 60. Okay, so we're looking slightly in the money. We want that extra move on our option should the stock move in our direction. So we're going to craft out a trade for this one. Go to buy custom with stop limit. And on this one, we're going to look at 10 contracts here. Reminder that we are risking roughly $6,250 here. We're going to place our stop on the downside right around, let's go with $5 here. And we're going to place our limit right around, since this is a tight spread, we're going to go 480. Okay. So let's look at doing that. We're going to place this, I'm going to unlock this for a second. Place that at the midpoint. Okay, perfect. So these just adjusted when I adjusted my price. So this is what we're going to go for, 620. Once that order gets a fill, this is going to send our stop limit good until canceled out there, okay? So we're going to hit confirm and send. Look to send this in the long options one. Again, most we can make. We're leaving that untapped. We're not putting our profit targets on in this case because it is a trend trade, not a target trade. So we are going to constantly move up our stop. We're going to monitor it. If you guys want to set alerts and things like that, I know that helps investors as well to see some levels visually on the chart. But essentially, that's what we're going to do with these trend trades is just move up or stop in this case. So we're going to hit send here on this one, and that order is sent. Okay, so we got through 4 trades today. Thank you guys for bearing with me. I know that you guys have been asking for more trades, so trying to incorporate your feedback and deliver upon that. Now, if you like this video today, please give it a thumbs up. Please subscribe to our Trader Talk Schwab Coaching on YouTube. And thank you guys so much for all your questions, engagement in the chat. Definitely love when you guys are just involved, learning new things. So thank you everyone for tuning in today. Thank you, Brett Crowther, for helping out in the chat as well. Please follow us both on X, Brett Crowther CS, Rachel CS, and I will see you next time. Thank you, traders. Have a good one.